I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate expert Ross Kay from the wealthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
Just saw on business television, a survey found 27% of Canadian mortgage holders feel they are over their head. Is this an accurate finding or panic or what?
27% of Canadians are over their head in their mortgages. Okay, so
they feel they are.
Pardon me?
They feel it's over their head.
They feel that they're over their head. Okay, so this is just defies logic when you hear surveys or commentaries or reports of this nature. What that means is, it means that the GDS and TDS ratio used to get a mortgage, as long as they're not involved with people who are spending ridiculous amounts of money, there really should be no hardship involved with carrying the property that they were approved for a mortgage on. And I think the one you're talking about, I think I saw that on BNN today, and the statement was 27% of Canadians. So what your listeners need to understand is what they're basically saying, this is how ludicrous these surveys are, and why no one should listen to them without taking some time to read further, because it really seeds your mind with some false assumptions about home ownership in the housing market. What they're basically saying is that would equate, when you do the math, to somewhere around 4.2 million homeowners in Canada are feel that their mortgage payment is too high for them. They couldn't weather an increase. Okay, folks, 4.2 million. There's only 4.9 million Canadian homeowners, or just over about 5.2 million Canadian homeowners who actually have more than a mortgage that where they only have more than 90% still outstanding. So when you take away the homeowners that only have 10% of their house value in mortgage, and you look at the rest, that's about your 5.2 million. This survey is basically saying every single one of them believes that their mortgage payments are too high for them. Just take these surveys, throw them out the window. They're nonsense. Now, if they wanted to drill down and they wanted to say that 27% of homeowners, Canadian homeowners, believe they're underwater with their mortgage, or believe that their mortgage payments are too high, then I'm just going to say even that number is wrong. So for the sake of the argument, there's about 12 million homeowning families in Canada today. And that would mean that approximately 3.1 million of those people feel that their mortgage payments are too high. So what that would mean is every single person who's purchased a house since 2012 feels that their mortgage payments are too high. Because I can assure you, anybody who owned their house prior to 2012, they have no problems with their mortgage payments. Their mortgage payments have actually dropped in the last 5 years when the mortgage came up for renewal. So that's how insane these surveys actually are. And without having the data at your fingertips, without understanding how people interact with their homes, without having some independent advice that you can have along the way, when you hear a survey like this, listen to it, try to read a few footnotes. If it doesn't make common sense, it's not common sense, throw it in the garbage.
Last week, we discussed the Bank of Canada making an interest rate hike this Wednesday, or a decision without first having the full June housing data to review. Today, it was reported 5 of 6 bank economists now say the Bank of Canada should hold off on raising rates. What should homeowners be thinking right now?
What they should be thinking is right now is what you're commenting on is how banks use their economists and their economic departments to mislead the public to build bank profits. This technique of arguing because a short week and a half ago, BMO and all these other banks were out there saying rates really should rise. That would curb the housing market. Yet here we are, a couple of days before any decision is being made, and now all of a sudden the banks are saying, oh no, you shouldn't do that. What's happened in the meantime is that the bank's big team of analysts have sat down and they've calculated the numbers, and they realize what happens to bank profits if interest rates rose, and that fueled a quickening of the slowdown of the Canadian housing market. They then signal to their economics department, hey, maybe this is really not good for the bank. All of a sudden, magically, a new report comes out, and you just are telling me 5 of 6 Canadian bank economists are telling people that it wouldn't be good if interest rates rise. Of course that's what's going on. What they didn't tell anybody, I'm sure if I could look at the research you're talking about, what I'm sure that they didn't mention was Canadian banks have actually caused the 5-year mortgage rate that most Canadians have access to increase 0.3% since November of last year. So actually, interest rates have already increased more than 1/4 percentage point. You just don't hear that reported in the news because it was a decision by the banks and not by the Bank of Canada. So when you hear the banks out there saying, oh, maybe they shouldn't raise interest rates, what you see is, what your listeners have to understand is that changes that CMHC made to their lending standards, which came into effect in March of this year, March of 2017, means that if your mortgage is coming up for renewal and you want to move it to another bank where that bank wants to maintain portfolio insurance, which is a lesser version of mortgage insurance. In other words, they don't have to pay as much money for it. Then all of a sudden you have to qualify at 4.64%. You don't qualify at the 2.4%. You got to qualify just as if you were a first-time buyer under the rules first-time buyers have had to purchase under for the last year. So what the banks, that gave the banks the power. I believe if you listen to our earlier shows from last fall, when after this policy was enacted or was forecasted to be hitting in March, I told your viewers that this is exactly what was going to happen. Now, again, the reason why I know it's going to happen is because it's happened over and over again for 40 years. The banks, knowing that they have their existing clients where they want them. In other words, the existing client can't just simply take their mortgage now, shop it around at renewal time, and move to another bank, unless they would have about a 60% mortgage. So if you had 40% equity, you may still be able to shop your mortgage, depending on what part of the country you're in. But on the first renewal, odds are, after you move into a new property, that's not going to be your equity position. So those banks now have the ability to squeeze you for a higher interest rate because you cannot move to another bank because you can't qualify at 4.64%. What the banks are realizing, I'm assuming, is that if rates rise, we're already in a slowdown of the housing market, an actual contraction. Correction in some parts of the country, as BC people know, Calgary people know, Alberta, excuse me. And now we've got a contraction in the Ontario market, which is, my assumption, is going to move to a correction very quickly. the banks are going to, their profits are going to start to decrease. It means their dividends, their ability to pay those dividends, those increased dividends, which they have been able to pay through getting Canadians more and more in debt, is now at risk. So what you see is a little manipulation of the Canadian public by the banks through their economists, which they have done over and over and over and over again for the last 40 years to get people to make decisions that are in the best interest of the bank. I'm believing what you're telling me today, but with 5 of 6 economists, bank economists, suggesting that interest rates rising are going to hurt the bank profits, that's exactly what the truth is. It is going to hurt the bank profits. What that means is the banks in turn are going to put the screws to the homeowners. Those screws to the homeowners will mean even higher costs regardless of what the Bank of Canada decides to do on Wednesday. Again, same as we talked about last week, Bank of Canada is going to make this decision without even my firm being fully able to vet June's housing stats, even though we already know what they're going to roll out, because again, these things are decided months ahead of time. But if someone was to ask us, no, we'd have to say, no, we're still going to need another week or two to go through all the data and to verify if our assumptions were true or not. The Bank of Canada is going to make a decision before that happens.
We'll have more with Ross Kay right after the break.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're talking with Ross Kay. Ross, it was reported last week that home prices in Toronto had dropped about $124,000 since March, and this was reported across national media. Isn't that a phenomenal drop in prices, and did it eclipse what Vancouver did last year?
Yeah, it just explained how crazy things are out there and why your listeners cannot make home owning, home buying, home selling decisions relying on real estate information from real estate agents or housing analysts. It was as absurd to suggest housing prices had dropped $124,000 off March's peak in the greater Toronto area than it was to say housing prices didn't drop in Vancouver of last year. What you had going on here is the compositional sales mix, which I can have harped on here over and over again, which continues to fool everyone because there are so many components that make up the compositional mix. And those components multiply with the larger geography you're measuring. When we're tracking Toronto, we know that the selling price of a home is exactly the same in June as it was in March. It has not changed at all. Now, you're going to hear that year over year prices were up 6.7% or something of that nature, which again is a falsehood. What normally happens is there's an opportunity for the market to get rid of some of this nonsense. But because this current trading cycle in the GTA has lasted so long, there has not been an opportunity for this nonsense to go away. So they don't realize how the sales mix has changed compositionally. Your listeners would be shocked, I am sure, to hear that when I'm looking at the Toronto market, and I'm looking at it in March of this year, 10.5% of the houses sold in March were under $400,000. So for under $400,000 in Toronto, 10.5% of the homes that were purchased they didn't pay that. They paid less than $400,000. And this June, it actually increased to 13.2%. So what you have is you have the first-time buyers where you can still buy a house for under $400,000 in Toronto, whether it's a condo or where different parts of the GTA, whatever you want to talk about. It went from 10.5% to 13.2%. Obviously, if those houses are under $400,000, the average selling price is going to plummet. And on the flip side, what also they don't talk about is the ultra-luxury class homes. And the ultra-luxury class homes in the GTA, back in March, it was about 12% of the sales. So 12% of the sales were going to homes that were at least double what the average selling price was. That number dropped to 7% in June. So obviously, if you take out, if your number goes from 12% down to 7%, again, your average selling price is going to plummet. What I mean by that is this. Remember, from 1985 forward, every single economist, every single analyst, every single bank, every single political party, every single government uses the average selling price to dictate policy, to forecast what's going to happen to the economy, to make headlines in the news every single day. Those selling prices I just debunked by debunking the $124,000 drop in the GTA average selling price. It's why you need, when we're commenting on a market, when we're commenting about people's net wealth tied up in their home, the way that we measure it is, we're measuring it as if they were to move at this moment in time. Because we know that there's so much surplus built into the average selling price that that much of their home equity is at risk. When you're talking about these things about a drop of $124,000, this is totally different when you're measuring the GTA market versus the Greater Vancouver market. It is two totally separate markets. The Greater Toronto market is about 4 times bigger than the Greater Vancouver market is. So as a market gets larger, there are also other variables that come into play. So people don't understand that. I'll explain it to you this way here, listeners. Toronto, in terms of a housing market, is 18 times bigger than what Vancouver is to our country. 18 times bigger than Vancouver is. A little tiny ripple in the Toronto housing market is felt across this entire nation. We can handle waves coming from Vancouver on a national level. We cannot handle waves coming from Toronto. So it's imperative when we hear comments like $124,000 drop in price, that the public actually hears the truth, that these are more economists is what we call them. They are more just ignorance on a housing market. And it's even more proof of why you need correct, accurate information about your own home, buy, sell, and own, so that you can make a rational decision way ahead of the mistakes everybody else is making.
We'll have more with Ross Kay right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, when you say people need to make decisions with the right kind of information, how hard or how easy is it to get the right information to compare what kind of price should you be looking at for your home if you're either buying or selling?
Well, it's much my self-serving interest, and I didn't expect this question, but by any means. Unfortunately, in Canada today, the only place you can get that information is through the wealthy homeowner. I'm just going to be quite blunt with you here now. The information that I'm talking about does not exist anywhere else. There is nowhere else in Canada where someone would have told you what I just told you in the earlier segment about the number of $400,000 minus property selling in Toronto skewing the price, or the fact that ultra-luxury class homes purchases have stalled in Toronto. There just is not any place else where the intelligence to back up these comments exists today. Now, I know, 15 years from now, what we're talking about here will be common. There will have been lots of academic reviews. The academics are after us all the time for us to reveal our metrics, for us to reveal our insights. When we say day zone between trades, which is one of the most important metrics in the history of real estate, because it forecasts how much illusion is in today's average selling price. Academics, we've got the local Western University Business School here, has contacted us wanting our data. We won't give them our data because it's our IP. Over the next 10 to 15 years, somebody will probably stumble upon how we calculate these housing markets. We may reach a point where, for the public good, we release some metrics that we use, and people can have access to them. But as of today, and until we're sure that our metrics will not be misused, because this is the problem that we have, Jim. The problem our firm has is that if we give our intelligence out to the public, or for public access, for public scrutiny, because it's correct, because there is no debating. When you're sitting and you're looking at these items, there is no debating the fact they're correct. They can be used for ulterior purposes. We already know how the banks use information to drive their profits with mortgage interest. We talked about it earlier today. Imagine what they could do knowing day zone between trade. Or, contrary to what I'm sure your listeners have heard, there is no way that they can, Ross K. Realty Consultants or the wealthy homeowner knows how many home buyers are out there. I can assure you folks, I've been able to do this for 30 years. Going back, we're able to calculate it for 40 years. We weren't calculating it back then. It is a proven fact, and when you sit down with a bunch of realtors who've been in the business 30 years, you probably could get them to understand what you're saying, and sooner or later they'd start to shake their head. But why would I ever do that? It doesn't make any sense. There's a famous firm down in the United States, ECRI, I believe, Economic Research Institute or something like that. They're the ones where their leaders define the business cycle for the first time. Well, as it turns out, folks, we've defined the trading cycle. We have 40 years of data in every single province in this country to prove that it's true. When we're making comments about the housing market, you see, we don't have to qualify our comments, Jim, because we don't have to worry about being sued. When you're right, when it's a mathematical certainty, or you're mathematically, you can't make a mistake. You can make statements as if they're fact. And the sad thing is that as of right now, we want to offer our wealthy homeowner service, our long-term, we would love to be able to offer that free of charge, but we're going to be 5 to 7 years before that's even possible. So there's a little tiny charge now, which again, If they don't save the money, they have it back. So there's no risk here at all. If we say anything that's true, that you believe is not true, just tell us. It's no problem because it's a fact. That's the problem. You cannot get this information from a real estate agent. You can't get it from your bank. You can't get it from a mortgage broker. You sure as heck can't get it from a financial advisor. And as of right now, we are not doing a full textbook on how to read a housing market. As of right now, the only place you can get that information in Canada, and this is the only country in the world, so I stress it, this is the only country in the world today where this is even possible, is with the wealthy homeowner here in Canada.
The Calgary Herald reported Calgary commercial office lease rates have fallen as much as 75% in the last 3 years, and vacancies are hitting almost 30% in some buildings. What does that mean for the rest of Canada?
What it means is that we had spoken about this on your show, I believe like a year and a half ago, that this is what was going to happen. And everybody has been going around for a year and a half with their heads stuck in the sand, thinking that this wasn't going to happen. Folks, listen, your listeners, listen. Real estate markets function in one way and one way only. Of course, over a couple of years, the vacancy rate in Calgary office buildings were going to go through the roof. What the problem that you have in all of these commercial buildings across Canada, well, as far as I know, around the world, is they weren't designed from day one to be flexible properties. In other words, there is no reason in Calgary that there were any new buildings built in the last 15 years where if the economy, it is a resource-based economy, no matter what anybody wants to say, if it flips, that those high-rise commercial buildings could not have been converted to residential buildings really quickly. The only reason they didn't was because the ignorance on how real estate works. Yes, I'll tell you right now, if I have a commercial client wanting to get a commercial high-rise building, office space in the city of Calgary, I will guarantee you, not only will it be, well, right now we're looking at 80% less than that's what they would have paid in 2014. But I'll also tell you, they won't even pay for it for the first year and a half. They will live there or work there free of charge for a year and a half. What your listeners need to understand is this. Everybody says when a housing market starts to correct, no, there's no houses. The pressure is on renters. What happens when a housing market starts to correct is, all of a sudden, magically, houses that were previously never available for rent are available for rent. The same way that the office buildings do. There's no vacancy held over. The landlords want to get these buildings leased out. This goes for residential homes too. So you'll see rents start to fall. Now, anybody who questions what I'm saying, you can look down in the United States right now, and you'll see, even though the home ownership rate has dropped, in other words, people quit owning their homes and they started renting them. Rents have dropped. There's places in major cities in the United States right now where there is a problem with the properties not even be able to rent out for enough money because rents are dropping so drastically. That's just the same thing that happens here, especially in communities where there has been a lot of new building going on. You get to catch that wave as it rolls through. Very powerful. So what everybody should learn from what's happened with Calgary commercial office rentals is that things don't go on forever in the real estate market, no matter whether it's commercial or residential. Rents don't continually go up. These companies that owned these buildings who thought they were so smart, we're talking about MBAs by the dozens at their board of directors table who believed those rents were going to keep going up forever because the oil, the price of oil was going to stay high enough. simply were ignorant to how every commercial market works in the world. Prices drop, folks. That's just the reality.
Recently, the blame for Canada's housing prices was placed on greedy Canadians and foolish home buyers or owners. Is that blame fair?
Thank you for the question, Jim. Okay, so for all of your listeners out there, you're not foolish. You did not make a bad decision buying a house. The only bad decision you may have made is if you are not planning on holding your house, being a homeowner, for at least the next 15 years. You believed, I understand, because the real estate agents themselves, the realtors themselves, believe their own propaganda. You believed what the realtor told you. Housing prices were going to go up forever. Oh, it's immigration. Immigration is always going to put pressure on the housing supply. Demand and supply is never going to match. Blah 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 blah. Folks, if you can find me one place in the entire world where that was true over a 40-year window, I will fold up my company right now. It does not happen. What you're looking at is, what people need to understand is this. What happens with a rise in interest rates? Okay, the problem that the Bank of Canada is in right now today, on Wednesday, if they raise the interest rate, because the way the CMHC lending policy has changed just over the last 1 year, the changes CMHC made were not made or designed to work in convention with rising interest rates. It's another case of coming in 10 years too late, bringing in a policy that should have been brought in 10 years ago. So when we're talking about interest rates, home ownership, bad decision, it's homeowners' own fault. No, that's not the truth. You would be an idiot to go out there being able to purchase a property at 25% of the cost that you were in 1990. Forget about the principal portion of your mortgage payment, folks. If you're a millennial and you want to be a millionaire, go purchase $1 million property. Because I will tell you, when you turn 60, the property is going to be worth more than $1 million. You would have only paid a certain amount of interest on that, and everything else went towards your own savings account, your house. The decision you made, the decision Canadians have made to own homes, to own the best home that they could afford, the highest quality home that they could afford, it was the smartest decisions that they ever made. I'm not saying you need to own it. You don't. You can continue to own it in the same way that you have for the last 40 years. No. You need a totally different strategy for the next couple of decades going forward. If you own it the old way, you're just going to continue to lose net wealth as you go along. That means nothing to be the point of the decision you made to become a homeowner. That was the smartest decision that you've ever made. Don't listen to anybody else because they don't understand how homeownership math works. Homeownership math means it is not your fault that housing prices where they are. The only fault that housing prices are where they are is because the cost of money has dropped so much that you can repay it so quickly today in comparison to when interest rates are higher that led to house price appreciation. You've also got to remember is you've been conned by organized real estate now since 1985, or well, actually it's 95. The first 10 years it was okay because the first 10 years it was called the average purchase price. It wasn't called the average selling price until 1995. In 1995, they started saying that the average price of a Canadian home was, which was the average purchase price. They're not the same thing, folks. That's what's really going to come home to roost over the next little while. That's why you have been misled on that area. The beautiful thing is about being a homeowner is, though, even though all these people have misled you, as long as you make the right decisions going forward, you are going to be so far ahead of the game. It's just a beautiful thing to see from a family's financing point of view.
Ross, thank you so much for chatting with us.
Hey, thanks a lot, Jim.
My guest has been real estate expert Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. If you have any questions for the show or our guests, they can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.